Happy Monday, April 17th. Today we're talking about inventory across the entire Bay Area and all the closed sales. And I have some bad news, some good news, some bad news. The good news is Santa Clara is just kicking butt left and right. I mean, every number that we see is just healthy all the way across the board. Bad news is just so that you know that the MLS that we use is regional. It's based on our county and a couple other counties. Some of it's like Alameda, which I actually think they go from a different MLS. So there's a bunch of different. Just break it down into different counties, I guess, is the best way to look at it. And each county decides which MLS system or software or app they're going to use. And wouldn't you know, MLSlistings.com is the software that we use, and they're based out of Santa Clara and Sunnyvale. And then there's Rapatoni, and then there's all these other software companies that offer MLS service for individual associations. Now it goes national association and then down to the state and down to the county or the area. Where I belong to Santa Clara County Association of Realtors, and there's also Silvar, which is Silicon Valley, which is all within the same thing, but they both agree to use the same system, which is MLS listings, which is when you look at the service, this is it, right? This is what our internal looks like. So we could do all sorts of stuff. We can do stats. We can do all sorts of, that's great. Well, I'm not blaming the system. I'm blaming one person, and it's human error. That's all it is. This is human error. The reason why I have these highlighted is because somebody missed a decimal point. And I saw this happen last week with a single data entry for a listing. It's just normal. It's human. This will be different. Like, look at San Mateo. No, that's right. But Alameda, I guess that's the volume sales today. So that one's actually not wrong. But this one is $1 million or $1 billion difference. So that's not right. And then this one is $500 million difference. So this one actually is okay. So there you go. When I'm looking at these numbers, and that actually makes sense. This one is 124 over list price or increase over last year. And this one is 187. So when you look at these numbers, the reason why I'm telling you this is because it's just skewed. That's all it is. It's skewed. So these numbers will be corrected. I'll probably take this out of the data stream tomorrow when they fix it next week or by the end of the week. Or if they don't, I'll let them know that they messed up. But just highlighting it, what that means to you is nothing other than Contra Costa and Solano are still great places to buy if you're looking at buying. Now, why? Is because one, they're over here. Contra Costa is over here. Solano's over here. They're further away from downtown San Jose, and the average cost of homes are a lot less. Just like Napa, if you were thinking about moving up to Napa, Napa is a wonderful place to live. It's away from Silicon Valley. I understand that. It's quite a distance. It's like 2.5 hours. This weekend, starting here, going up here to pick up a buddy of mine. And I'm probably going to go up to Berkeley area to pick another buddy of mine. And then we're going up to the Delta to go to Discovery Bay to have a reunion with all my Marine buddies. And I'm super, super excited. Super excited. I haven't seen some of these guys in 20 years, 25 years. So super excited about that. Okay. What's going on? Nothing's really going on. Napa's still down 75%. Last week it was down. A couple of weeks ago it was down 73%. So on average it's down. Probably one of the most hurting places. You could probably pick up a really good deal in Napa if that's a place you want to move to. Santa Cruz is doing okay. They're holding their own. And the problem is Right now, inventory still sucks all across the nation. We talk about this every week. Supply hurts. Demand is up because rates went down a little bit. Now, I just heard something from one of my news inputs. People want to see 5.5% for them to buy. Well, we can't keep it at that. That sounds like a glorious thing to do. I understand that, but with the amount of supply that we have and the fact that we need to stop the inflation that we have, we can't drop the rates down that low. You can buy your rate that low. You absolutely can with points. But if you had it normalized at 5.5%, then you can buy points down to 4.5% or 4.75 or what have you. And then it will be back to the firestorm that we were used to, and we don't have enough inventory for that to happen. And then affordability becomes an issue. And that's what we've been battling, is we're trying to bring prices down a little bit, right? As a matter of fact, in California, I think this is US wide, prices have contracted 2.5% or 2.3%, which in the big picture, that really doesn't help, because over the last 5 years, we've seen 8 to 15% growth year over year. So affordability is still out there. And now, because the rates are so much higher, payments are up 11% more than what it is. If you can see what I'm reading, this is my cue right here, right? Inventory is still dangerously down low. We're down 25%, 8 months of decline, month after month. The 8 months of decline, that's the thing that we've been seeing and we've been tracking. We expected, as a matter of fact, right here, this came out. This is California Association of Realtors. This came out and said the realtors believe that sales will be up. Well, sales are up. Sales are up compared to January, December, November, right? But those are the slow times of the year, right? Prices will be up. Yeah, I think prices are going to come up a little bit compared to where we bottomed out in September, October, November last year. I think that was the bottoming out of the market. Now we're seeing it flatten out and kind of go up. This is where I think we're wrong. I think agents are saying that listings will be up. I don't think that's going to happen. I think that's going to be our Achilles heel this year. Pardon me. I think the listings will remain low, and that has been what keeps the pricing at bay. On the average, we're seeing prices level out. They're not continuing to shrink, which hurts affordability. If you want to find out what markets are looking at, this is another one of my talking points right here, right? Housing alerts. Go to housingalerts.com. If you need this link, let me know. I'm happy to share it with you, right? It's a great way to get inside the mindset of what investors do, right? And here's a little thing of, remember when I tell people real estate is kind of like, there we go, kind of like little league soccer, like little kids playing soccer, right? You have everybody starting out the game playing positions, and all of a sudden the ball goes over here, and all the kids run over here and kick the ball, and then the ball goes over here, and all of a sudden it goes over here. That's what real estate is like. When you have a new listing, everybody shows up and they're fighting for it, and one person gets it, and then another ball turns up, up on this side of the field, and all of a sudden everybody goes over there. And it's kind of like that with different areas too. It's human nature, I think, or just nature in its own thing, right? Because if you looked at wolves in nature, they would probably do the same thing. They go to the resource, they go to the food source, they go to where the water is, and that's just natural. Well, right now, where you want to find weaker markets, again, is up here, just like I showed you, right? Contra Costa, Solano, that's Sacramento, I think that's El Dorado, or maybe this, I don't know. And then that's Alameda, Contra Costa, Solano, Napa, this is Solano, All these areas right here, Sacramento, they're kind of stronger right now, right? They're saying they're stronger, but they're not because they don't have the market. Where you want to go, oh wait, that's the pink. You want to find orange, red. So yeah, these are the weaker places. So if you're going to invest in California, these are the places. Chico's up here, Redding. Where it's strong, crazy strong right now is over here in Florida, Carolinas, Georgia. But look, orange, red. This is I look at this all the time. I look at this. This is Tampa. I look down here, Cape Coral area, super strong markets. I wouldn't invest in there. I would probably go closer to Louisiana, Mississippi, Alabama, Tennessee, Arkansas, and these areas right here where it's weaker, especially Louisiana, right? Maybe Idaho. Idaho's hurting right now. Oregon's hurting right now. So if you want to learn more about this, and this is just a master score, you can look at multiple different ways of looking at it, like median home percentile, actual growth, combined average growth, I think, home price appreciation. Wow, totally different, right? Let's take a look at this. Look at the home price appreciation all over here. If you didn't buy over here, probably shouldn't buy right now. Over here, it went crazy. You don't see a lot of places over the last 3 years where prices have come down. Now, these are older things. These aren't real time, right? Because you have to pay for the subscription. And I can't show you the subscription part. All right. Last thing, Homebuilders cancellation. Let's open this up. Homebuilder cancellations are off the chart. This is an investor program, right? So take this with a grain of salt, right? You can go to the Midwest and buy new homes, but I wouldn't buy new homes right now. Mainly because there was such a shortage, such a huge fight to get resources, to get labor, to get people there, that whatever homes that they put together were done shoddily, were done with very low quality, and there's a ton of warranty work being done on a lot of them. And my feeling is that we're going to see a lot more of this. This will settle out because people will eventually have to turn to it because of inventory of resale homes being so low. But bottom line is we're seeing inventory impact pricing. I have a bunch of houses we're getting ready to put on market, but they're going slow because labor's hard to find. So we're in this weird anti-verse where we're looking at the anti-Superman, and all this stuff is coming out where bad news means good stuff on the stocks. And it's weird because it's affecting everybody, and you can't determine what's going on. There's still people claiming that the market's going to crash. Possibly it will. They're still saying that we're going to see a recession, and possibly we will see a recession. My feeling is that real estate is going to stay, especially in the Silicon Valley. Excuse me for hiccuping. I must have some soap in my coffee. Especially in the Silicon Valley where there's still a ton of jobs. And even though they're announcing 10,000 layoffs here and 10,000 layoffs there, every person I talk to that is being laid off already has a job. Or they're talking to multiple people right now, or multiple companies. So it's almost like they go from working for, I don't know, say Google or Apple, and then they go down to a second tier or third tier company, still get paid the same amount. They're giving up on some things, but it's also they're giving up on a lot of responsibility, so they're happier. I know a guy that went from being a team leader, a manager, and he went to a different job, and he is ecstatic. He's just so happy that he can go back to writing code every day. It's not for everybody. So, it's good when recessions happen. And when recessions happen, prices actually continue to go up. The only time that happened in the last 50 years was in 2008. But that's because we caused that. The finance market, caused the real estate collapse. So there you go. I want to talk more about cars. We'll talk about that tomorrow. I'm Vito Scarnecchia with Abitano. We'll see you out there.